What's happening, world? This is Jabari Long with another episode of The Long Report. Today we got a real exciting show, very informative, with my friend, loan officer, Mr. Todd Caldwell. How you doing, Todd?
Doing great. Thanks, Jabari.
Good. It's been a while since we connected, man. How you been?
Been doing great.
Good.
It has. Market's been a little weird. Mortgage industry's finally picking up.
Okay. Are the people still weird too, or?
Yeah. I get the best kind.
So today we're here to talk about VA loans. Todd, how long have you been doing mortgages?
I just celebrated a few days ago 22 years.
Wow. Happy anniversary.
Thanks. It's a lifetime.
Yeah. Yeah, so over the years or so, you saw a lot of changes, a lot of different things. The VA loan is a very niche product. So tell us a little bit about it.
It's a very simple product, theoretically. Veteran comes out or is currently in the Army, Navy, whatever, in the military armed services, and they can buy a home loan. They can get a home loan with zero down payment. They have to pay their own closing costs or negotiate them with the seller. But on paper, it seems like a pretty easy benefit to get.
No money down.
No down payment. Doesn't mean no money down. You probably have to give the realtor a few bucks to put in an escrow account to save it, called earnest money deposit. Okay. But and you have to pay your own closing costs, and like I said, unless you can negotiate them. In this market, it's getting better and easier to negotiate those, where the seller pays your costs. A couple of years ago, it was almost impossible.
Right.
But the inventory is dwindling a little bit, and the buyers are starting to get closer to the sellers. So it's starting to become a buyer's market.
100%. Yeah. So sellers are willing to do a lot more than what they were at times.
Yeah, compared to 2 years ago, almost exponentially.
Yeah. So I like that, and I'm glad you clarified that. When we say no money down or zero down, that doesn't mean no money out of pocket, right?
Right.
You gotta come to the table with some money to buy a house, whether you're a veteran or not. Mm-hmm. But in the right scenario, with the deal structured properly, we'll try to minimize that down payment by negotiating closing costs and concessions in your offer.
Correct. Yes. Yeah. Nothing's free.
Yeah.
Well, I did have a veteran a couple of years ago buy a rather large house, and he got maybe a year ago, he did receive all the money from the seller. He ended up doing $500 out of pocket total just for the appraisal.
Wow. Okay.
Turned out really good.
Yeah. So does the person just have to be in the military? You spend one day, you sign up, do you automatically get the VA benefits? Or?
No, it's more than that. It's a little bit more. If you're in the military, at a certain time frame, you can buy. There's some stipulations though, like if you're stationed in Virginia and you're from this area, you want to buy a house in Michigan, you can't do it unless you have a spouse, not a girlfriend, not a father. Been through this, by the way. You have to have a spouse to buy in Michigan, even though you came from Michigan.
Okay.
So, and when you leave the military, as long as you've done everything right and you have the proper discharge and the right paperwork, you can receive a VA loan. Even reservists can qualify, but they made it a little more difficult for reservists. Once you've done your 6 to 8 years, they changed the rules about 6 to 8 years ago to where my brother, this almost happened to him. He was a reservist, did his time, even worked for the government after that. But they changed the rules to where if you're let's say you did 8 years, and every year you have to get some kind of points, where it's active duty or drills or something like that, training. You have to have at least 1 point a year. So for the 8-year time frame in this example, let's say you're pretty gung-ho first few years, right? You have to do the basic training, every summer for 2 years anyway. So the first 2 to 5 years, you're doing a lot of trainings. You're not active duty at all in this example. And then maybe the 6th or 7th year, you start slacking off. Maybe the 7th year, you don't have any points, but you have enough to fulfill your contract. The government, 8th year, you might have a couple points, and you have enough to fulfill it. Well, they changed it now. If you don't have any points in the 7th year in this example, you cannot get your VA home loan benefit.
Does it restart over at that 7th year? You got to go in there?
No, you just unless you join another branch of the military, no, it doesn't start over. So that person who did that those people who do that are not allowed to have the VA home loan benefit. My brother went from Indiana to Florida and back again, and he had to marry the two up to get points in every year. So his second time he tried to use it, I almost received a denial. We had to point them in the right direction, shows them where it is. And that's the reason he received his second one.
Because he was your brother.
Yeah, sorry.
No, all jokes aside, but you all did the homework and the legwork to kind of connect the dots for them.
Yeah, there's a whole system for it and how to get your points and get the records from the VA. It's pretty darn easy for most veterans. There's very few exceptions where it's hard.
Okay.
There was a fire so many years ago that wiped out some records from people from certain time frames, but it's extremely rare now. Those people are older now.
Now, you said earlier that if you're married, then you can, the spouse, you could buy a home in a different state. But if you're married and the wife is in the military, you all both get a VA benefit, correct?
Yeah, you could do it together or separate. So when you get married, if you want to use one of your VA benefits and then maybe she wants to use it 2 years later and buy another house, then you could do it under her.
Okay.
And you can also reuse your benefit. It used to be much more difficult than it was. It used to be where you could only do the bonus, it's called a bonus, and there's some stipulations for it. But you can only do the bonus if you were moved by the military, or let's say you're in Georgia and you received your first house there. But you still have it, you rented it out. Well, great, but now you're in Michigan 20 years later and you want to use it again. Well, that used to be pretty much the only exceptions. Now it's much more easier. I have a person who, in my office, he's doing one where some person is leaving their VA house to another VA house. I have one who's looking for a house who has their VA benefit they're renting out to their daughter. And then she wants to move into, and it's been away for 3 or 4 years. Now she wants to use her VA benefit. There's a fancy calculation for it, but it can be done.
So that initial house that she's renting to the daughter does not have to be refinanced. That original VA loan does not have to be refinanced and paid off?
No, it does not.
Wow.
No. And like I said, it used to be a lot more difficult, but now it's not as hard. Okay. Even I was surprised by it. I'm like, this is impossible to do. And a few years ago, the guy was telling me he was redoing something. I'm like, you can't do that anymore. He goes, yes, we can. And yep, we learn. Things change a lot in our industry.
Wow. Okay. So who qualifies for it? Is it, do I have to serve active wartime? Is it, I know a veteran, he was a cook in the military. Like, who qualifies and who doesn't?
The ones who do full-time military, they sign up, they're enlisted, and they come in and out, and they get honorably discharged.
Okay.
And the reservists who do the same thing, but a reservist can bump it up. They don't have to, sometimes they don't finish out their 8 years because they get injured or something, but they can actually go active duty as well. And if they go active duty and they're still within their 6 to 8 years, they then can buy a house. Okay. If not, they have to wait to the very end.
All right. So is this a product that you feel like the Veterans Administration is really looking to push and advocate and make sure that their members, our service members, are taking advantage of that? Like,
I think so.
Okay.
I haven't had a bad conversation with any of the HOCs, home ownership centers. Yeah. Haven't had a bad conversation with any of those people. They always are proactive. They're always giving me tips and tricks and trying to help the veteran. They even, you can Google this, I won't say the name of it, but there was a national lender who got in trouble a few years ago because they were only targeting veterans to refinance. And you're not allowed to only target veterans or a certain group. You have to target everyone for refinance. So you got to put your advertisement and your money toward everybody. Gotcha. And that company's been sanctioned twice now for VA stuff. I don't know why they still let them do it, but they're a huge, gigantic servicing company.
Okay, so they wanted those VA loans on their books for some reason.
The reason is very, very interesting. VA loan gives you a 25% insurance policy. So if I'm a bank and I want to give out a VA loan, I know that if it goes belly up, that I'm going to get I could get up to 25% of the original loan amount to offset any foreclosure losses and loss when I resell the house. Generally, homes aren't resold at a huge discount. Sometimes, but rarely, because they still want to get every dollar they can out of there. Right. It isn't like a car which they'll wholesale off for 25, 30% of the value, and that magically becomes the value of the house, of the car. Houses, they don't want to give the house away. So when the Veteran Administration has to resell it and the banks have to resell it on their behalf, the 25% really helps out the banks. They really love to give out a loan for veterans because it's an insurance policy they don't have to pay for. Right.
The government has their back.
Yeah, they do. They really do.
So what are the core requirements for a VA loan? I talked to a gentleman yesterday, and I was telling him about the show, and he said, "Yeah, man, I love the VA. I bought 3 houses with my VA loan." He knew all about it. And then I speak to other veterans who are clueless or somewhat apprehensive or hesitant to apply for the VA loan. I'm like, I mean, you did your service. Why not, take advantage of the benefit?
I found this a lot. By the way, some veterans do not want to deal with it because they think it's a hassle. They just, especially the ones that just come out of the military. Sometimes they're exhausted from it. There's so much paperwork. and the military. There's paperwork for this, and that. Even the exit paperwork can be troublesome for some people. Well, they don't want to deal with it. They don't understand how easy it is. As long as you keep your basic discharge to DD-214 or equivalent, the equivalent is because some of the reservists don't get it. There's another version of it.
Okay.
And they don't want to deal with it. They get a hassle. Now, as long as you can find that piece of paper, we'll go online. We'll get your certificate of eligibility for you. And it's rare that I can't get it. It's like magic. It magically happens. But I had one last week. I could not get the certificate of eligibility. We talked to the home ownership center, and they had access to a database we didn't have access to. I'm like, we have all the IDs. Why can't we get it? So we spoke with the consumer. They went on, took them 5 minutes to fill out the paperwork online, and the next day it was emailed to them.
So what you're saying is if they were in the military and they got a DD-214 or the equivalent, and you already said that there's zero down.
Yeah.
So, what are the other hurdles? Like, why wouldn't everybody be using it?
That's my question. That's really one of my questions. But the VA is just like every other loan in one aspect. It's a math problem. You can only use so much of your income towards your house. And then there are some biases out there in the real estate industry about VA loans. They think they take longer to close. They think these people aren't worthy because only a lot of they're not putting down a lot of money. If you tell me I can get a house with zero down, I can save that extra $10,000 in my bank account. I'm going to save the $10,000 in my bank account, especially with someone like me. Yeah, I'm going to tell you, if you put down that $10,000, it's only going to reduce your house payment by $600. No, every 10,000, $60.
$60.
$60.
Yeah. So
Yeah,
I'd rather keep the money in the bank.
Yeah. $60. I'm keeping that for my rainy day fund because every 1,000 with today's interest rate is about $6 per month.
Okay.
But there's a wild bias in the industry that it's also magic that it only happens when it's a seller's market. When it's a buyer's market, every realtor, every homeowner will accept a VA loan. They'll do whatever they can. VA loans, there's a myth about the appraisals. Appraisals used to be done by only veterans, and there was a select few. Now it's been opened up. So the same person that drops by to do the conventional loan will do the VA loan, will do the FHA loan, will do the USDA loan. And their calculations on how they create the value for that home are the exact same with very, very few differences. But VA and the other government loans also look at health and safety. They want to make sure there's no cracked windows. If it's pre-1978, they want to make sure there's no peeling paint.
Okay.
And that really gets people. I just had one, and they had to fix the peeling paint around the windowsill on the garage. That seems to be the one that we get a lot. And there's a bias in that, and from some real estate professionals, and they've passed it along to their sellers. Yeah. And it's a disservice. Yeah. But the VA loans don't take longer. If you have but they do take people with lower credit scores. So those sometimes can take longer. Sometimes those people, there's a reason why they have lower credit scores. Sometimes they're not great with paperwork. Sometimes they take longer to get me stuff. And we're not going to hang the buyer off to dry.
Yeah, 100%.
We don't tell them it's the buyers. We take the hit.
Yeah.
But they take longer. The value is weird, which is untrue. The people aren't worthy buyers. I have conventional buyers that are hanging on by a thread, and they have to put down a lot more money just to qualify. And a VA loan has a lot of forgiveness in it.
Gotcha.
So
you talked about credit score. There is actually no minimum credit score requirement, right? I mean,
you would say about 580.
Okay.
It gets a little weird below 580 if it can be done.
Gotcha.
But the lower the credit score, we're all driven by this computer system that does these evaluations on you, and they look at data on your credit report. They look at your payment history behind the data. They know now it's called trade line history. Trending data, they call it. They know if you paid more than your minimum 5 months ago. So they'll see that, and that goes into the computer system now. So people who have a lower credit scores, the computer system will approve you. We're all beholden to this computer system, and there's also something called manual underwriting. But the automated computer system makes it easier for people to give you a loan. Because if you pass through the automated and they do their checklist and your income looks good, everything else looks great, it's a solid loan that can be insured by VA. Understood. And they will stand behind it, and they're not going to look for a way to wriggle out of it if you go into foreclosure. If it's a manual underwrite, then they're going to not let you buy as much. They're going to lower the threshold. There's something called debt-to-income ratio. It's a math problem. But the lower the credit score, the worse results that we get. And the debt ratio is theoretically 41%, but which is of your gross of your usable income. So you make $10,000 a month, you can have $4,100 in debt. That's everything,
including the new house.
including the new house. However, the computer system will approve you. I had one approved at 82%. We added his wife at 75. We closed at 72.
Wow.
No, because VA has something called residual income. They use it's a hand typed or hand calculation thing. The computer can't do it for us. We have to it'll do the math, but you have to type all the stuff in from the IRS publications, and you have to know certain things. And it can lead to someone getting an approval and then being denied because you didn't do the hand calculation.
Gotcha.
So as long as you have enough residual income to pay for your everyday expenses, they're going to give you the loan. But the lower the credit score, the less you go above 41%.
Understood. So what I'm hearing is, and I know a lot of this is technical jargon,
I was
right?
trying to stay out of that.
But if you have the DD 214, you have somewhat decent credit, and you have the income to repay a loan with the right loan officer, someone like you, you probably can get that VA loan done, right?
Yes. Should not be difficult. And every seller should accept your offer.
Yeah. Yeah, I'm a realtor as well, and I've heard those preconceived notions about VA, FHA, and they'll put that to the bottom of the offer stack, right?
Yes.
Especially when it's a bunch of offers, and tell the seller, okay, let's go with this conventional or this cash offer because we know it's going to close, even if that price is lower than some of those VA loan offers. And always put it to the loan officer, right? The quality of that person actually doing the deal will determine whether or not it's going to close and not what type of loan product it is. Because if the loan officer, you give me a pre-approval or an approval for a buyer, then I'm certain, because I've dealt with you for a while, that buyer will be able to close under that loan product.
Yeah. And I will ask the realtor, and I think you've done it with me, is I'll reach out to the other realtor, the seller's realtor, and talk to them about it. And many times in the listing tickets, as you know, they don't list VA. Sometimes it's old habits. Sometimes it's a mistake. And you need to call the other realtor and ask them, will you accept a VA offer? And you talk to them and you get them comfortable with VA. There's some preconceived notion. Another one's at the pest inspection. A couple of years ago, June of 2022, VA came out and said the seller no longer has to pay for the pest inspection.
Okay.
Well, up until then, the seller always had to pay for it. Just one more thing the seller has to pay for. One more thing that someone didn't account for, whether it's $68 or $168. It's one more thing the seller has to worry about. And we used to combat that by using home inspectors, because we always recommend private home inspection. But if you get a private home inspection, we recommend certain home inspectors that would give free pest inspections or termite, they call it too, for veterans. But now I still recommend those people.
Yeah, 100%.
The one I like to use the most is a veteran group, and they'll still give it for free. They won't even line item it as anything extra, so they'll give it to them. But that's another misconception but June 2022, they made that change.
Yeah. So you touched upon a great point. The loan officer communicating with the seller's realtor, right? That is so valuable. I put in offers a lot of times. The selling agent, the listing agent, they'll say, well, I'm gonna call the loan officer before we accept. And when I got your pre-approval in there, I just sit back and wait because I know they're going to feel better about me and the whole deal once they talk to you than they did when I sent the initial offer. So
make ourselves available. Try to pick up on the first ring whenever we can.
100%.
And or you call them back. I mean, I'm over 30. I use voicemail.
So let's talk about these core benefits, Todd. Credit score, we talked about that. Income to debt ratio, we talked a little bit about that. You need the certificate of eligibility. You got to get an appraisal. The property has to meet certain standards, which is common. And then you got to occupy the property as your primary residence for 1 year, right?
Correct. That you're supposed to. Some people skirt the issue, but you're not going to get another VA loan. Now, if you end up, the guy. Yes, you're supposed to do it for a year. Some people break the rule, but if you don't ever go into foreclosure, no one ever busts you. But if you're trying to buy a house a month later, no one's going to accept it.
And we definitely at the Log Report don't advocate breaking the rules.
Yeah, don't do it.
So major benefits, right? Talked about the zero down, no PMI. Let's talk about that. How does that impact the payment?
I just did this calculation a little bit ago. So no PMI, no private mortgage insurance. FHA likes to call it mortgage insurance premium, whatever it is. It's mortgage insurance.
It's more money.
It's more money out of pocket. And you never get anything back for it. Can't write off your taxes. Can't do any of that. So a $200,000 loan, a 0.5% interest rate is about $63 a month. Per month, all right? The mortgage insurance, we'll table that for just a second. I'll get back to that in a second. There's a reason I mentioned that. We'll get back. But the mortgage insurance on a $200,000 loan could easily be, I did the math a little minute before I got here. It was around $40 a month.
Okay.
For a great credit score, putting 5% down conventional loan. Great credit score. If your credit score is in the 660s, it's going to be $148 a month. VA doesn't have that. In fact, VA loans tend to be 0.5% lower than conventionals on any given day.
Okay.
They tend to be. Lower the credit score, it gets a little worse. And so a 0.5 point, and just think about this, a 0.5 point on a $200,000 loan is about $63 a month. But there's an interesting thing, and my industry has done a horrible job of telling people this because we advertise rates. Rates don't matter as much as people think they do because that same $63 is exactly $10,000 less. So a $190,000 loan will be $63 less. So a 0.5 point interest rate on $200,000 is $63, and every $10,000 right now is around $60, give or take.
Okay.
So some people, they're really interested. I want the absolute best rate possible. The people that go for the best rate get the highest cost. The people that go for the lowest, people who want the lowest cost get the highest rate. What you really want to find is the baby bear. What's right in the middle? And different lenders we have different rates, so we pick and choose what we want to do with them.
Yeah.
But the no PMI, that could be great. That's a lifesaver for some people.
Yeah, that could be the difference between a person qualifying for this particular house and not because of their DTI.
Yeah.
So reusable benefit, that's another benefit to it. Let's talk about that. And we kind of touched upon it a little bit, but you got some people that are scared to use it and some people that just can't stop using the VA benefit.
I know. So there's two different people with VA benefits. One gets some money from VA because they've had some kind of illness or injury either during or after their service. Those people don't pay any upfront fees or they don't pay anything. The typical veteran, when they first use it, pays on a 30-year, will pay 2.15% of their mortgage. So you have a $100,000 mortgage, multiply that by 2.15, and that goes on top of your mortgage, and you pay on that for life. That goes into the VA foreclosure fund. They call it the guarantee fund. So we call it the VA guarantee. And if you use it a second time, it's 3.3%. If you, and there's some talk about changing it real recently about reservists will pay more. That's just been in the news recently. And they haven't implemented it yet. Refinance is 0.5%. But if you're exempt, you get $5 from VA which is ridiculously low, but I think a lot of them are $200 or $300. So if you have some kind of service connectiveness issue, you're going to be exempt from that fee. You don't have to pay it ever. And especially those people are going to use it over and over and over. Think about putting 3.3% on top of your mortgage. If you have a great credit score, you might do the math and say, I'm going to live there 5 years. Maybe I want to go conventional because that extra 3.3% that goes on top if you're using it twice, even 2.15. But if you're going to be there for a long term or you have zero, it's not an issue. That shouldn't even...
Yeah, I would fair to guess that the vast majority of people who fit this product are not going to be overly concerned with the minor differences in interest and cost that you're paying over the course of a 20, 30-year loan. It's just minuscule in the whole scheme of things, right?
I agree with you. But once a year, you get that person. Can you help me with my spreadsheet? Let me send you a copy of my spreadsheet. Right. Here's where I put the MI.
Right.
Hope that guy's not going to watch this.
So seller concessions you can get, right? The realtor can negotiate that. And then the veteran can qualify for higher DTI thresholds. So all of these things in the mortgage industry are very favorable to a borrower, right? Yeah. It's like you would just love to put more people, like they might not qualify for the conventional, but they could, if they were a veteran, they'd definitely easily qualify for the VA product, right?
Yeah, because the interest rate's lower, so it's less debt-to-income ratio, the math problem. Yeah. And then the no PMI really helps because you talk about just the interest rate in the PMI, there could be $30,000 of purchasing power you're giving away. Concessions are interesting because there's still a problem with concessions and how they're talked about in the mortgage industry. There's still people spewing out the wrong answers. You'll see in the guidelines 4%. 4% concessions of the purchase price. That only goes toward recurring items like escrows, setup, insurance. Closing costs, true closing costs, when you read the guidelines, it's unlimited. So you can have discount points, you can have origination fees, you can have title fees, tax prorations if they're paid in advance. All those are closing costs. And the VA guideline says unlimited. There is no percentage for that. Only for the recurring costs like taxes and insurance. And you could actually, no one's doing it right now because it's still a slightly seller's market, but in the old days when it was a buyer's market, the seller could use part of that 4% to pay off buyer's credit cards.
Wow.
Buy them a big screen TV.
Wow.
It was wild what they would do, but we don't do that anymore. It's kind of
Well, it's cyclical, right? You know, right
It
now
is.
it's a buyer's market, but soon it'll be a seller's market again, and we're gonna keep that in mind.
Yeah, but that 4%, I've had to go back to underwriters. There's a special underwriter called LAP, L-A-P-P, for VA. A lot of lenders use non-LAP underwriters to review the file, and then they give it to a LAP underwriter at the very end to sign off on it. And we've had to back down some of the ones before the LAP underwriters and tell them, no, you're 100% wrong. I can do more. I can get all the closing costs covered. And they say it's more than 4%. Well, we're not applying it. It's about how you apply it. We're applying it to those costs, not those costs. So, but eventually they learn, and but the more of those we get, the more we learn. We can't know everything.
Yeah, life is a daily teacher, right? So you get new information and you incorporate it and implement it into what you do every day.
Yeah.
Talk to us about rehab, right? So a lot of veterans, they might see a home they like in a perfect neighborhood, but it needs work, it's outdated. Is there the ability to do a rehab loan with the VA?
It's limited, but yes. So it's a $50,000 limit. And you have two companies I work with. There's very, very few people that do it. It was pioneered by a company called FGMC that's no longer in business. They were the first ones to get it. And it's $50,000, and it's very limited what you can do it for. Very, very limited. A lot of people will do a different type of loan, then refinance into VA afterwards. So like a conventional loan, if you have a $200,000 house, you can only make it worth $400,000. FHA, you have a $100,000 house, you can have a mortgage up. You can improve upon it, have a mortgage up to $500,000 plus.
Okay.
VA only lets you put like $50,000 more on top. And it's very restrictive, but it can be done.
But you can do things like kitchens and bath remodels, right? And resand the floors and paint and put those nice fancy appliances in the kitchen, right?
Yeah, very few lenders know how to get it done.
Okay.
We have two of them that know how to do it.
All right.
It's just not something you see every day. And for years, people would say, we have this VA repair loan, a rehab loan, or VA construction loan. And then when you get into the fine print, you realize, no. What the person's going to do is they're going to do two loans for you. They didn't tell you that. They say they're going to use a home or a line of credit that we have for construction loans. Someone like we could do it, and then we'll refinance you to a VA or switch you to a VA loan at the end.
And I think, it's important to be transparent, right? For loan officers, you don't want to do that bait and switch, but really making sure the client understands what's happening.
Yeah.
A two-loan situation may be the best environment, the best process for them to create the environment they want in the end, the house that they want, the loan product that they want, and the situation that they want. So it's good that, you are familiar with the processes and know how to communicate that to the potential buyer, because so many people, they look at that first no and they say, okay, this home, it needs a $75,000 worth of work. I can't use my VA loan and I'm stuck. But no, you just got to come kind of sit down at the table. Let's talk through it and figure out a way that we can do it.
Yeah, and we love two loans.
I bet you do.
We do.
So let's talk about some of these common myths. You talked about them earlier. They take too long. The seller won't accept it, and you only can use it once. In the VA, they kill the appraisals. Everything that you just discussed and said wasn't true, they got here as common myths. So
yeah, they're not out to get us. The VA appraisers are not out to get us.
No, not at all. I think we get this things in our mind, right? These misconceptions or these myths. And typically they come by way of people who are not in the industry. They come from, barbers and, stylists or mechanics, someone who may have had one limited experience in doing a loan, but not in the industry. And so they're helping to spew a lot of this, these falsehoods out here to consumers.
Yeah, that's exactly what it is. Or it's a realtor from 35 years ago, or pre-pandemic. There was an example of, let's see, how to explain this. Before we were regulated, there was anyone could do a VA loan, still can, but there was a lot of misconceptions of people they go into it not realizing there's some cost restrictions for us. We can't just junk the costs up for a VA person. And if you're doing it right, you shouldn't do it anyway. And some realtors were burned by mortgage people saying, we can do a VA loan. And then they get halfway through the process, they realize you're not making any money. There's certain mechanisms behind the scenes too complicated to go into, but you realize you're not making any money. So we come to the realtor and say, I need $2,000 more because they got to boost their income. Well, that's being regulated. What we put down from day one is almost impossible to change. And now it's almost possible to make more. We can make less money, but not to just add money on just to make more money. So I'm glad the regulation took effect.
Yeah. That's interesting. So let's talk about using the VA loan product for wealth building. I love real estate and the things that it affords. Tell us how you see a person who has an investor or investment mind state who is in the military. I know I actually went on a cruise a couple years ago. That wasn't a cruise. It was to Jamaica. Right. So I got hopped on somebody else's trip. We went down, and the person or the people that threw the trip, it's probably like 20 veterans. And they were all young, got in when they were 18, did their 20, they either retired or about to retire. And some of these people were invested in real estate. So tell us how a person can use that VA benefit to build wealth in real estate.
Okay. Well, you get your first one, your primary. That's one option. And then you systematically, every couple of years or so, fix it up, get a good deal, fix it up, buy another one. You can only have so many, though. You might have to end up refinancing after you definitely do, into a conventional loan or some other type of investment loan. There's a few of them out there that you don't show any income for. And you can refinance them and or pay them off, right? Maybe you have enough money to pay them off. And the other way is, in addition to that, is buying it you can buy 2 to 4 unit property with a VA loan, 0 down. You have to live in one of them, though. You got to live in one of those 4 units. And then maybe a year or so later, you move out and do another one.
So live in a unit, rent the other 3, live mortgage free because rental income is covering all your household expenses.
Yes.
And then go and repeat the process a year later.
Yeah. And eventually after 2, you definitely, it's hard to get 2. Not hard, but it's a little easier than it used to be, but definitely not 3. But you can refinance those into other products.
100%.
Or pay them off.
Yeah.
Or use all that money you're getting to show a profit, and you don't use your VA benefit the 3rd and 4th time. So you already have the money. You don't need it. You could do more money down. You can do 5. But when you do, the reason why a VA loan is such a cool thing for multi-units, because FHA is the same way. You can do 1 to 4 units with just 3.5% down. Conventional, though, is typically anywhere from 15 to 25% down from 2 to 4 units. And there's an exception for that for first-time home buyers, but that's not what this will be. So conventionally, 15 to 25%, depending on how many units, 2 to 4.
So a person comes to you, they want to buy a 4-unit property. And say, just for this example, 3 of the units are already rented. Are you able to use that rental income as part of their income to qualify for the loan?
Absolutely. In fact, when the appraiser goes out, the appraiser will actually say whether it's rented or not. And under certain circumstances, whether they're rented or not, you can still use the income. Because the appraiser does a special thing called a 216, and they will actually show you inside the appraisal how much the going rent is.
Okay, and give you credit for that
Yeah.
in your loan.
To offset your debt to income ratio.
So if I buy a 4-unit property, I'm getting more income to qualify for my loan just for having those rental units available.
Yeah.
Whether they're rented or not.
Yeah.
This is game changing. I tell people all the time, like people tell me, well, I don't want to live with people. I want my own house. I don't want to, but you don't really have the income to support living alone.
Right.
Why not start here, build some equity, live rent free for a year, and then move on to the next piece of property once you're in a better position financially.
Right. Just finding those good deals out there. Those 1 to 4 units.
And they're out here, tons of them.
They're out.
Yeah.
2 to 4 units. But yeah, they're out there.
Yeah.
Sometimes there's 5 and 6 units, and those don't qualify.
Yeah. So we talked about the competitiveness. You say some people are very rate conscious. I think I heard you say that the VA loans are about 0.5% cheaper than conventional loans now. So it's definitely in there as it relates to rates.
Yep. And it's better. I mean, if you have a lower credit score, the VA loan's a better product. It's lower. It's maybe up to a point less than conventional loans.
Wow.
So the lower the credit to a certain extent, the better the rate you can get with VA over conventional. Then, of course, there's the whole mortgage insurance thing, which is exponentially higher for conventional. And FHA has mortgage insurance as well. I mean, if they went the FHA route, it's 3.5% down. 0.55 on an FHA loan is almost exact same as adding 0.85 to your mortgage. So you have a 6% mortgage, it's really the equivalent of 6.85%. You have a 6% VA mortgage, it's still 6. But the mortgage insurance with FHA is 6.85.
Okay. So it says some tips to avoid, right? And this, I guess, will be considered for all homeowner purchases. Overbuying based off the approval amount.
Yeah, I get that a lot. I think a third of my business is business that was at somewhere else, some other company. And one of the biggest things we see is people approve them quickly and say, yeah, you can buy a $200,000 or $300,000 house. Great, I'm going to go buy it. And then they're severely disillusioned when no one said, but this is what it's going to cost. It's $300,000 cost. It's going to cost $2,300 a month. Oh, by the way, if you look at the history of the tax records and you know how Michigan does their taxes, I can tell you what the taxes would have been this year if you bought it last year. I can use my Ouija board to tell you what they're going to be next year. But I can temper that a little bit by saying, based on year-over-year tax increase, this is what your taxes are going to be. So if you're buying a house and you pay $2,300, I might tell you it's going to be $2,600 within 2 years. By the time it takes a year to catch up to you and take your taxes. Anybody who buys a house right now, taxes are set the rest of the year, except for the homestead exemption stuff. You're set. Your taxes aren't going to increase until July of 2027. So you're all set. But you have to prepare people for that so they don't call you and say, I can't afford my house. That's a horrible feeling.
Yeah.
And I don't want to see them on Channel 4.
Yeah, that payment increase could come in like a Mike Tyson jab punch.
Yeah, exactly. That's tough. But so a lot of people just overbuy based on what they can be approved for. My first question when I ask people is, what do you want to pay? And sometimes there's a little bit of disconnect because I don't want to grab their credit score from minute one. I want to know, what do you think you're going to pay? How much money do you think you need? How much money do you have? And what's the maximum you're willing to pay for your dream house? And then we go backwards and try and figure out what's the maximum payment if taxes are a certain amount. When I give a pre-approval out, my pre-approvals now say $195,000. I'll pre-approve an exact address if I can, and then I'll put taxes less than or equal to $5,000 a month or $4,000 a month. So when you're looking at homes with a realtor, they'll know, okay, I can go to $200,000 as long as taxes don't exceed $5,000, at least at the initial part. And that's what we tell people. So someone telling someone they can pre-approve for a $200,000 house is doing them a disservice unless you tell them taxes can't exceed a certain dollar amount. And then insurance is crazy now too. So we're jumping up our estimates on insurance.
Yeah, there's a lot of that disservice in the industry. I think, realtors, everybody has a certain interest, right?
Yeah.
The realtors want to sell a house and get paid, and then once we sell it, we could care less what happens to the buyer after the fact. The loan officer just trying to throw it on the wall and see if it'll stick.
Yeah, sometimes. We try not to do that. We want referrals. I don't want this guy's referral. I want his entire family's referrals. So we try and do the homework. But there are people you have to slow down and say, you can't look right now. Let me do the homework. Let me go figure out all the nuances. There's something weird with your income. Let's verify your income with your employer. Let's see your pay stubs. Let's double check everything because sometimes it's a little weird. And people tend not to budget for maintenance of their house either. Now, VA makes every veteran qualify for behind the scenes. You don't know this is going on. We qualify them with 14 cents a square foot. That's like adding a credit card onto your debt ratio at 14 cents per square foot. So so some might have to qualify for a 2,000 square foot house, qualify for $280 more per month. Who puts away $280 more a month toward their house maintenance on a 2,000 square foot house? Almost nobody. But if you did, let's say $100,000 square foot house, but $140 away. Forget $140. How about $1,000 or even $100 a month? How about $1,000 a year? I know I did more than $1,000 work a year, but it's going to take 5 or 6 years before I renovate my house.
Right.
So VA makes sure you qualify for that extra hit because a lot of people finance those hits.
Yeah.
So I always use that with people asking about, how can I afford my house and what if I want to upgrade later on? Just say budget 14 cents a square foot or $1,000 a year. Put it in a separate bank account. Kind of lose your money in a separate bank account. 5 years from now, you want to redo your kitchen, you have at least $5,000 to work with. Refrigerator goes out, go get a new refrigerator. You don't have to budget for it. You already did budget for it.
You already did, yeah. So, new construction. Somebody says, okay, I want to get out the city. I want to buy some land. I've actually got a buddy of mine who talked about doing that using a VA loan. How would that work?
That would be a two-step process.
Two-step, okay.
You would do a construction loan with the end loan being VA. Two-step process. There's some, and we might even have most of the construction loans are two-step process, but they call them a one. But conventional loans do a one-time close.
Okay.
So you actually sign your paperwork the one day for the initial interest rate and the end. At government loans, we tend not to do that. I haven't seen one yet. Maybe they're out there, but I haven't seen a one-time close. It's basically you have to have two closings.
Gotcha.
But you would do a construction loan. You have to qualify for the construction loan, and construction loans are not for the faint of heart. I personally would never do a construction loan. I don't want to do them. I don't have the time and the patience, but there are people who have much more patience than I do.
You're talking about as the buyer or the borrower?
As the borrower, yeah.
Okay.
There are people who have much more patience than I do.
Okay. But you love doing them as a loan officer.
Oh, as loan officers are great. I just don't. I don't want to. There's a lot of meetings, a lot of picking out stuff. I think my wife would love it.
Yeah, I'm sure she would.
I don't. I'm gonna go shopping. I already have a pre-planned out what I'm gonna buy.
Right.
I'm gonna go to the LL Bean store. I'm gonna buy those shoes. They're in stock, and I'm gonna get in. I'm gonna get out.
Okay.
But no, construction loans are great. For a lot of people, love to pick their tile out, their kitchen out. I'm just not that guy.
Understood. Yeah. So tell us, Todd, like I run into, especially in the construction industry, it's funny we were talking about that. I meet contractors all the time who are veterans. They don't have the, not getting any VA benefits. They're not even going to the VA hospital. I tell them about the VA loan product and they're, apprehensive, they're leery. Like if I'm a relative of a veteran, like a son, a daughter, or a grandson, like what should I do to encourage my family member to look into, the dynamics or what it would take for them to qualify for a VA loan?
I'll call someone like me. They have to talk to someone like me first because, we will ask them certain questions. And the first thing is we'll ask them about, were they discharged? Honorably.
Honorably.
Like, were you discharged honorably? There's less than honorable, there's dishonorable, or sometimes people get out from medical. They get hurt in basic training, they don't qualify.
Gotcha.
But we want to make sure that they are doing, and we pull their certificate of eligibility. It's free. Absolutely free. Like I said, most of it's magic. We just get it within seconds.
Okay.
Most of the time. And then it becomes a standard mortgage. We need to know your income. If you're in construction trades, you're probably self-employed. Mm-hmm. Make sure they file the last 2 years' tax returns, and because that's a big deal. VA, there is no 1 year exception. Some loans have a 1 year exception, it's not VA.
Okay.
But we want to get them to start talking to someone like me first, just to feel us out, just us first feel them out, just to figure out Where can they go with it? Are they prepared? And if someone finds out they go zero down, that's fantastic.
Yeah. I know a lot of people have unhealthy and living scenarios and situations that they do not like, and there's a veteran in the home, and I'm like, well, maybe one phone call could turn on a faucet and wash all the bad away and put you all in a better environment,
much better position. I've had a couple of those. It's like the grandfather, ends up taking the 2 young children on or something like that, and this VA benefit, and moves.
Yeah. So we got a lot of that, especially with the economy being the way it is. We have this multi-generational households, right? And sometimes 3 generations in one household. So oftentimes there is a service member who has those benefits who could, qualify for these VA loans and allow the family to build more wealth.
And if there's more than one person, so if one veteran and you want to get a mortgage with another non-veteran that's not your spouse, the interesting part is it's a 25% insurance policy. Well, if you're going let's do a father-son, father-daughter, and the father is the veteran and the other person is not, it's about a 12.5%. There's a whole formula, but it ends up being 12.5% down payment. Okay. So you get a 12.5% down payment because they're only going to cover half of the 25% insurance fund. So if they have the funds and you want to buy with a non-veteran, you're not a spouse, then it's about 12.5% down payment.
Okay.
So there's a way to do that too.
Yeah. And you might need to do that because the veteran might not have enough income.
Yes.
Or the credit might not be strong enough.
Yes.
A lot of different variables. But basically, there's more than one way to skin the cat.
Yeah. You can actually get veterans loans this way. And some people, not everyone puts down zero. There's a lot of wealth in this country. There's a lot of people with a lot of money. And if you tell them you got to put down 12.5, sometimes you're hesitant. They're like, yeah, okay. It's like, oh, that was easy.
Yeah.
They love it.
Talk to us a little bit about the spousal benefits. So if you got a spouse, her husband is deceased now, does those VA benefits go to her? Can she qualify for a new home loan?
Theoretically. So it's narrowly construed. So a spouse whose partner has died because of their work in the VA or in the armed forces can qualify for the VA home loan. It has to be directly contributable to their death, whether it's active duty, that's an easy one, or let's say and I know this I know this family. 20 years later, the guy was a shipbreaker. He would take apart the ships, and what do we have in ships? Asbestos. So they basically irradiated, or they did radiation on him, and he ended up, not having any faculties left. The radiation killed the tumor in his brain, but killed his brain too. When he passed away, she was eligible. And again, they got no hassle from the VA at all. And she filed the right paperwork, and she was able to receive a VA loan because it was attributed to his time in the service. So spouses can get that.
Wow.
And spouses can. The other thing in Michigan with spouses, I think you're the one who told me it, is, there's one thing first. If you're a veteran in Michigan, you file the right paperwork, they will, and with 100% disability, you can get rid of your property taxes. Now, I've seen letters that say 80%, 90%, but then they use the word 100% below it. Some say 100%, then 100% below it too. And so if you have the 100% at the very bottom that says theoretically you can't work, then you can have your taxes waived in the state of Michigan. And up until a couple of years ago, I didn't have any lenders that would do it before you closed. I've got 2 lenders that will do it before you close.
So that's the difference between the borrower qualifying and not.
And not qualifying. The example I gave where the borrower got all his money from the seller, all but $500, that's what he did. He was able to qualify and not have to pay taxes, not even escrow for the taxes.
Wow.
So he wouldn't have qualified any other way. The house was too expensive. He made a lot of money, but the house was just too expensive. His credit wasn't perfect.
Okay.
So it inhibited him. If his credit was perfect, I don't think it would have an issue. We could qualify with the taxes. Now, mistakes can happen. So if he didn't file his paperwork in time, then they would have gave him a bill for his taxes. He'd go fight it with the servicing company. So you have to make sure that you talk to your veteran and say, look, we're not kidding. File this paperwork because you're going to be mad at me. You're going to be mad at them. You're going to be mad at yourself a year from now when you get when your taxes are going to go up and they're going to say they're going up $300-$400 a month because now you got to pay tax and now you got to pay the arrearages.
Yeah. And we just got to be proactive, right?
Yes.
You know, you qualify for the benefits. You have the paperwork. We're not doing anything illegal.
No.
This is procedural, and then you qualify. So you just got to make sure all the paperwork is
Yes.
filed and submitted. And sometimes, you need to bring a box of donuts to that office and play nice with the people. And
It's unique that we could even get it way before. There's a person in my office 5 years. I was 7 or 8 now. Hold on. It was a long time ago. He actually tried to get that done. And he said, well, he's going to have it waived. And the underwriter we worked with waived it. And we couldn't pass the loan off in the secondary bond market because of that. We held on to it for 6 or 7 months. By that time, he had the paperwork filed. There was no taxes.
Gotcha.
So we had to service the loan. We don't like servicing loans. The whole industry works off a different model. So it was interesting. But now we can do it. Things
Game
keep
changer.
changing.
Yeah. Well, Todd, I definitely appreciate your time, man. I always learn something when we communicate. This product is definitely a game changer. I hope this episode is going to encourage more people and their family members to reach out to you to see if they qualify and to close more VA loans. Because, I mean, the government has the money. They're backing them.
Yeah.
Might as well take them up on their offer.
Yeah, it's not, the guaranteed fund is not running out of money. They're solvent, and it's there just for everyone to take advantage of it. I wish everyone would.
Yeah. So, Todd Caldwell, First Securities Mortgage, how can the people reach out to you?
So they can call 734-788-6607. That's my personal cell, 734-788-6607. My email is tcaldwell, TCALDWELL, at 1stsecurities.net. So numeral 1, stsecurities.net. So tcaldwell at 1stsecurities.net or 734-788-6607. And I'm over 30, so once again, please leave a voicemail or a text, and I will return them. I'm a fanatic about returning them. You know, on vacation, even my wife gets irritated because I'm in Mexico and something like that, and I'm returning phone calls. Yeah. I have backup at the office to help me, but I'm still like to talk to the people first time.
Yeah, so Todd is a guy I've been knowing for, I think we first met in like 2016. So
Yeah, something like that, yeah.
Yeah, knowing about 10 years. By far, he's the Michael Jordan of getting deals closed, man. He can slam dunk the basketball. I have never had a client who, and I'll say this to you, Todd, never had a client who reached out to you and didn't call me back and say, man, I love that guy. You know, he explained it to me. I feel so comfortable, so more comfortable dealing with him.
Good. We can't close them all, but
at least they know that too, right? Call me back in a year. This is what you need to do.
I love those people that do that. I really do. There's people who, it's a good feeling when they actually call you back a year later and say, I've done these 8 things you told me to do.
Yeah.
I want to get a house.
And we want to help them, right? Like, we don't make any money sending them away saying you're denied, right?
A lot of my competitors do that, though. A lot of the big box places will send you away and just shut you down.
Yeah.
Not give you any help or nothing. Yeah. They go based on volume.
Yeah. So great show, Todd. Once again, Jabari Long wrapping up another episode of the Long Report. Veterans, spouses, and relatives. Employ your servicemen, your relatives to reach out to Todd, see if they qualify, and close using these VA loans. Y'all have a great day.